Do you feel like we've seen some more data points that make that the case, or is there still more downside to come?
In the short term, we have hit a bottom. The 24th of October was an irrational overreaction from Western markets, particularly around the outcome of the Central Party Congress. And on that day, I think I called bottom, at least for the interim. And we've seen many stocks rise by 30 to 70% since then. We've seen also movements over the last few weeks that we anticipated as the government tries to now stabilize the economy now that all the political kind of battling is done under the surface. And so we've seen announcements around the property space. We're seeing zero COVID rollbacks. And I think things are generally on a positive trend. We could still be in for more turbulence as Western markets react to evolutions on the ground, but it certainly feels more stable today than it did 3 weeks ago.
So, Ben, I want to call your attention and viewers and listeners on SiriusXM as well to some late breaking news and some headlines crossing right now. This is coming from Reuters. The headlines say basically that the U.S. watchdog gained good access to audits of Chinese firm. That's per sources familiar. The story says that U.S. regulators gained good access in their review of auditing work done on New York-listed Chinese firms during a 7-week inspection. 4 sources with knowledge of the matter said a key step forward in resolving a long-standing bilateral dispute. Again, this is a Reuters report citing sources. That has now propelled in the pre-market some of these U.S.-listed Chinese tech stocks like NetEase, JD, Meituan, others up in the markets. Do you believe as though, Ben, that this kind of improved transparency into the books, so to speak, the accounting and financials at Chinese firms could provide more clarity for investing going forward?
Absolutely. This was an anticipated movement. We'd heard similar rumors and reports over the last couple of weeks. The Public Accounting Oversight Board folks from the SEC were in Hong Kong doing an inspection. That inspection wrapped up, I believe, last week faster than expected, and we were told it was satisfactory. That hopefully starts to diminish some of these threats that there could be mass delistings of Chinese companies listed on U.S. exchanges, and hopefully paves a way for future listings. We've essentially had an entire shutdown of U.S. listings for Chinese companies since the DD IPO in the middle of 2021. So a critical move. But again, part of those lists of actions that we expected to come that were very much within the control of Chinese government regulators to improve conditions for global investors in the market.
And Ben, it's not all, rose-colored glasses here. There are obviously reasons why the Chinese tech sector overall has been under pressure for the better part of the last year or two. Are there things that still worry you about investing in some of these Chinese tech stocks?
Certainly. I mean, the lack of clarity around the regulatory conditions in the market continues to be pervasive. There is still a broken sense of trust, and Western investors today, I think, don't believe they can trust the Chinese market. And that's going to take years to rebuild in many instances to make China investable for many of those on the margins who don't have access to primary sources. I'm also fearful of continued geopolitical risk, particularly as it pertains to the U.S. government. I think there's the potential for a looming U.S. capital ban into China, something that could come by an executive action in the coming weeks that could affect the amount of capital coming into the Chinese market from the United States. So those types of bilateral geopolitical risks are pervasive in Chinese technology, as we've seen coming out of U.S. essentially sanction type actions over the last month in the Chinese chip space.